So a lot of you hear about people who make money in the stock market and they're able to use that money to fund their lifestyle. However, you're kind of a beginner to the stock market and it's a little bit intimidating for you. And now you're wondering, well, how do I actually get started as a complete beginner? So in this video, I'm going to talk about how to make money in the stock market as a complete beginner. And for me, it actually just comes down to these three strategies. So strategy number one, you can collect dividends. If you've been following me for a while, you know that I love to collect dividends in my portfolio. But what are dividends? Dividends are basically income payments that are often given to you on a quarterly basis. This means that if you own some sort of dividend-paying ETF or stock, every quarter or so, you're going to get a couple of cents or a couple of dollars depending on what the ETF or stock is. So let's take a look at some real-life examples. Let's say that you invest in one of my favorite ETFs like SCHD. If you were to invest $100 into this dividend ETF, you would be able to collect around $3.53 per year. I know $3.53 doesn't sound like a lot, but we always want to think bigger picture. Because if you were to invest, say, $100,000 into SCHD, then you'll be able to collect around $3,530 per year. If you take that a step bigger, then if you were to invest, say, $1 million, you'll be able to collect around $35,000 worth of dividends each year. And again, with this money, this automatically goes into your account without you lifting a finger. As long as you own the shares before this thing called the ex-dividend date, you'll be able to get the dividend payouts every quarter. And remember, I'm not even talking about the asset appreciation itself, which I'll talk about later on in this video. Okay, what if you don't want to invest in dividend-paying ETFs? What if you want to invest in individual stocks? Well, a popular dividend-paying stock is Coca-Cola, or the ticker symbol is KO. If you were to invest $100 into this company, you'd be able to collect around $2.85 per year. And if you invest, say, $1 million into Coca-Cola, you'd be able to collect around $28,500 worth of dividends each year. Okay, so let's talk about strategy number two. This is my favorite strategy, which is to sell covered calls. Selling covered calls is an income generating strategy that a lot of people use, including a lot of these large institutions. But what are covered calls? Like, what does it mean to sell a covered call? When you sell covered calls, you're basically selling the right to someone else to buy 100 shares away from you for a certain price and date, and in return, you get paid a premium. And this premium is kind of like your dividend where it's actual income. So going back to my example of Coca-Cola, if you were to own 100 shares of Coca-Cola, you could then sell a covered call against your 100 shares to collect premium, or around $100 per month. Now, this premium is always going to be different because it depends on what the market volatility is and which contract you choose to sell. Sometimes the premium can be higher, sometimes it can be lower. And I made a whole bunch of videos on how to sell covered calls on my channel, so feel free to check them out later. Now, going back to my example, if you were to own 10,000 shares, you'd be able to sell some covered call contracts against those shares and collect anywhere around $10,000 a month. Okay, so let's talk about strategy number three. This is the most popular strategy that pretty much everyone knows, which is to make capital gains. So what are capital gains? What does that mean? Capital gains is basically the profit you make from selling stocks and ETFs for a higher price. So for example, if you were to buy one share of an S&P 500 ETF like SPY for $100 and you sold it for $500, you basically made $400 worth of capital gains. Again, taking a look at this from a larger scale, if you were to buy, say, $100,000 of this S&P 500 and sold it for $500,000, you would have made around $400,000 worth of capital gains. And this is what all wealthy people do. Instead of going to a job and working for their money, they're letting their money work for them. A lot of investors treat investing kind of like a business. Basically, whenever they buy one share of an ETF or a stock, it's kind of like them hiring an employee or a team member. This employee or team member basically goes out to make money for you as the boss. They're able to generate income for you by collecting dividends, selling covered calls, and making capital gains. And really, in my opinion, these are the three easiest strategies as complete beginners to start making income in the stock market. Now, if you want to learn how to build a dividend income portfolio so you can live off of your dividends for the rest of your life, I'll leave a link somewhere on my face right now so you can watch this video. If you found value in this video, I really appreciate it if you gave me a like, subscribe, and even leave me a comment down below because it really does help me with the algorithm. All right, everyone, you guys have a wonderful day, and I'll see you guys in the next video. Bye, everyone.